David, the key word here is June. Fed officials, according to the minutes, definitely tilting toward a rate move in June, and Fed officials are worried the markets are not ready for that. The key line, and listen to this closely, most participants judge that if incoming data were consistent with economic growth picking up in the second quarter, labor market conditions continuing to strengthen, and inflation making progress toward the committee's 2% objective, then it likely would be appropriate for the committee to increase the target range for the federal funds rate in June. That sounds a lot like the language they used in October, all but promising a rate increase in December. Several times, the minutes reflect Fed officials' concerns that investors, as the minutes put it, quote, may not have properly assessed the likelihood of an increase in the target range at the June meeting. And several times, the minutes note that some participants argue they needed to communicate that possibility. The minutes note a range of views among participants about whether their data goals would be reached by June, and there was general agreement that while conditions had improved by late April from the earlier first quarter, the real strength of the economy and inflation was still, at that time, difficult to measure. So on April 27th, the minutes say participants generally saw the wisdom of leaving rates unchanged at that meeting and then assessing developments carefully, a stance they characterized as, quote, leaving open the possibility of an increase in the federal funds rate at the June Fed meeting. The minutes go on to note, quote, a few participants explicitly wanted to raise the rate at the April meeting. One, obviously, Kansas City Fed President Esther George, who dissented from the committee decision. Two participants, the minutes say, argued traditional policy benchmarks like the Taylor rule suggested that maybe the Fed is falling behind the curve. So the bottom line, the weak first quarter might have changed the market's perceptions of how often and when the Fed might go, but it hasn't changed the Fed's view. If the data provide reassurance to a data-dependent view, then the Fed is on the table for June.
Mike, I was looking at the minutes from the previous meeting, the March meeting, and I noticed a real robustness there in that section on participants' views on current conditions on the economic outlook. If you were to contrast the two sets of minutes here, a more robust still conversation about that in these minutes?
Well, there was still concern about business spending, and there was still some concern about overseas developments, but those concerns had diminished significantly because, in part, federal financial conditions had improved, and along with rising wages and some decline in energy prices, it was supporting consumer spending. The minutes say they explicitly took out that reference in March to global developments in order to send a message to the public, a message that apparently a lot of investors didn't get. There was also one reference to Brexit, with some participants worried it could roil financial markets. That vote just a week after the Fed's June meeting, but there is no mention of it being any kind of disqualification or a factor that could derail a move, David.